And everyone, switching gears, since I had those earnings aforementioned, let's dive in on GameStop earnings with our next guest as well as shares. We're immediately moving after hours lower here for GME. We saw them moving negatively. So Michael Pachter, let's bring you in. Let's break these results down just a little bit more for our viewers here. Just some context, shares reacting negatively on the fourth quarter results from the video game retailers. The company reported a wider than expected loss here. I want to get your reaction. You were actually expecting that they should have been profitable in the holiday quarter.
Yeah, they've never failed to deliver a profit in the holiday quarter. A lot of people actually buy consoles and software for holiday gifts, so you would have expected that they would have delivered a pretty solid profit on a upside to revenue. They beat our revenue estimate by about 100 million, and they missed our profit estimate by a couple of hundred million. So clearly, the culprit is low gross margin, which means that the mix was heavily skewed toward hardware, and then really high operating expense. Their SG&A was 540 million, and we were looking for 400 million. So they're spending a lot of money, and I think that's really the news in the headline. They're going to open an NFT exchange sometime toward the end of the second quarter of this fiscal year. So they're clearly spending a lot of money ramping that up. Ryan Cohen has a lot of confidence that he's right, and I'm going to bet that he's wrong on this one.
Where do you believe this company is on its reinvention process?
Digging a hole that they'll never climb out of. They have a couple of $1.25 billion or so of cash on the balance sheet. They lost 140 million in the holiday quarter, which is pretty embarrassing. If they lost that much in the holiday quarter, they're probably going to lose a couple $100 million a quarter going forward if they keep this up. And again, let's hear what their earnings call says. But they can only continue to do this for a couple of years, and they're back in the position of being out of cash. So this NFT exchange better work, and I don't see how it possibly can. He's reinventing something that he has a solution in search of a problem. He's got an NFT exchange, and there's no NFTs to exchange. So we'll see if he can find some, and we'll see if people really want to buy them on the GameStop exchange. I'm betting probably not.
The community of gamers seen as one of the most kind of forward-looking, perhaps, in terms of the technology and being able to grasp onto new waves of technology, whether that be across cryptocurrency, whether that be across the medium that they're even engaging with games on, and the community that gets fostered as a result of that. Is that community strong enough for GameStop to be able to monetize how they are building out and for all of these different measures, trying to invest in this strategy in order to monetize that community of gamers at the end of the day?
The community of gamers is super strong, and pretty uniformly, they detest GameStop. They feel like GameStop rips them off on used games. And, except for the people who actually trade games in, nobody perceives that there's a tremendous amount of value in GameStop. And I don't think Ryan Cohen, meme stock or not, has any loyalty from this crowd. So sure, they are likely to embrace NFTs, but why trade them on a GameStop exchange? Why not use Coinbase or T0? I mean, there's other exchanges that are already FINRA compliant, FinCEN compliant, anti-money laundering compliant. Why is GameStop the place you're going to go? To me, this is like starting up a cloud service. He decided that he's going to compete with Amazon and Google Cloud Partners and Azure. He's going to get his butt kicked. I just do not see what the hook is for GameStop to be in this business. So good luck to him, but I do not. I think like I said, a solution in search of a problem. We have a place to buy NFTs if there are any to buy, and those other exchanges aren't selling many, if any. So I just don't think he's going to get the inventory. I don't think that there will be NFTs created specifically to be exchanged on GameStop. I don't think the NFT creators are going to want to give a piece of the action to GameStop. So I just don't see it. I mean, I think this is a non-starter.
And we knew that they had that cloud opportunity way back when, stepped off of it with Spawn Labs because it wasn't generating revenue quickly enough or profits that they could put back into the project. So we'll see how this new vision for the company, which kicked off essentially in earnest last year, now 1 year in, still not getting much fanfare. Just with the time that we have left, I want to get your reaction to Netflix launching a new feature, quote unquote, that customers who share accounts aren't thrilled about. cracking down on account sharing even further and saying members who share outside of their household have impacted Netflix's ability to invest in content. Your take on Netflix as of this point in time with this new strategy?
They're right. I mean, if you pay for a subscription, you should pay for it. If you use it, you should pay for it. And they're right. I think that it just opens a whole host of issues. I literally just bought a new TV and installed 2 new Roku boxes, and I had to register 3 times for Netflix in the same day. If they started cracking down on that all in my household, I would have been really massively pissed off. But I agree that if I were sharing it with my neighbor should pay. The problem is, I think that they make it so easy to quit that what's going to happen is we'll share passwords by churning out. So we'll have one subscription and I'll use it for 4 months, then you'll use it for 4 months, and then one of our friends will use it for 4 months, and they're not going to really solve anything. So I think they're going to alienate consumers. They're going to drive people to churn out much, much more frequently. And the ones who are sharing legitimately, like my kids who are away at college, use our subscription, they're still part of my household. I don't want to have to validate that. I think the right solution is just give us 2 or 3 devices to watch Netflix and then charge us $5 one time for each additional device registered, or have ad support for each additional device. That would excuse me, that would work, but I don't see Reed Hastings doing anything differently than he's been doing before. So cracking down on cheaters is right. I just think it's going to drive people to churn out.
Michael Pachter, Managing Director of Equity Research over at Wedbush Securities. Always a pleasure to speak with you, and pretty good at Wordle from what I've seen on your Twitter as well.